here we have your net assets, and I just put in percentages. Obviously, we don't have to put out any too much information here. Uh, but you know, obviously, I don't know. You want to walk us through that and kind of give us your spiel and how you divvy it up?
Yeah, for sure. So let me pull this picture up real quick. Yeah, so stocks, obviously, I mean, you see the background here.
Yeah.
Stocks,
Yeah.
it is the foundation of any good portfolio. And yeah, the way this is kind of split out, you don't really see the different accounts and different, brokerages that it's going into. The vast majority of my investments are split between um, Wealthfront, which for people who don't know, Wealthfront is a robo advisor. It's like Betterment. I think like Charles Schwab has. I think a lot of the big brokerages have them now. In a nutshell, you put money in, you tell them how much risk, like what your risk tolerance is, and they just put it in all of the places it needs to be. And so when I was at Google, I had my 401k, which was in one of those like target retirement funds that is under the hood, just like, 80% stocks, 20% bonds, something like that. And then all the rest, I just shoveled into my Wealthfront, and my risk tolerance on there is like maxed out. So they're putting the vast majority of that into U.S. stocks, foreign stocks, emerging market stocks, all that kind of stuff. And then real estate most of that is home equity. So be paying off my mortgage. And then a little bit of that is Wealthfront. When you have an IRA or any kind of retirement account with Wealthfront, they'll put some of your funds into real estate investment trusts, the REITs,
Yeah. Wow.
which is basically just like real estate turned into an ETF that you can trade. And I think the reason that they put that only in retirement accounts is because they generate a lot of income, and normally that would be taxed with income tax in a normal brokerage, but if you're in a retirement account, it's not. So they save it for that. The cash is checking. It's the little bit that like Wealthfront keeps in cash to do all their little fancy
The cash account.
tax loss harvesting, and like, yeah, I also have a cash account with them. And then what was other? Just like miscellaneous weird investment vehicles that I just couldn't classify. I forget what I even had in there. Probably just weird stuff that wasn't really a stock, wasn't really a bond. I think like Wealthfront put some money in tips like treasuries, which I guess you could say is a bond maybe. And then yeah, bonds really low, 3.5. They don't really pay out at all these days. I think like if you read a random walk down Wall Street, they recommend a much higher allocation of bonds, because the idea being like you could basically reduce your risk without cutting into your gains a proportional amount. It's almost like risk-free growth when you have the right bond stock allocation. But I think that's kind of fallen out of favor just because bond yields have gone down so much with like just the way the economy's been working recently. And then crypto, I decided this year actually, after like Tesla got in on it, Square was getting in on it, like all these companies that have like a lot to lose were getting in on it. I said, okay, this is worth a second look. Like maybe there's something to this crypto stuff, because up until like I thought crypto was just a total joke. It's like Bitcoin, like it's worthless, it's based on nothing. It's like these people are just speculating. It's literally just a pyramid scheme. And now big companies are in on that pyramid scheme. To me, that gives it a little more credibility. So I decided like 2% was enough to allocate to crypto, because that's kind of what these companies were doing. And I had heard like even established like financial organizations and like big names in the finance world saying like a 2% allocation is a reasonable crypto allocation. So I said, all right, if I lost it all, 2% of my net worth, it would not be great, but I'm not going to like, it's not going to change my life.
Right.
But if, it all goes to the moon and 10x's, then that makes a big difference to the bottom line. So, and if it just kind of grows a little bit, outperforms stocks or whatever, like that's just a nice little additional growth. So I
Right.
have, initially it was all Bitcoin. It was like, a, it was actually half Bitcoin and half just like a stable coin. And I had it all in BlockFi, which you were so kind to introduce me to.
Links in the
Uh,
description.
it's good stuff. Yeah.
Yeah.
I wish they would fix their app, but I hate having to like, I don't know about if it happens on Android, but on iOS, they don't save your username and password. They
No,
make you log
it's
in every
every
time.
time. Yeah, that's the worst.
What are they doing?
Yeah.
I
Yeah, it
might
really
get a
is.
job there just to fix that and they quit.
It really is
But
a pain, a huge pain point. Huge pain point.
yeah, yeah. So yeah, I was 50-50 on the Gemini dollars and then Bitcoin. And then a buddy of mine was like just harassing me about Ethereum, saying like Ethereum, we got to get in on Ethereum. And I was like, okay, it's the second biggest one. Uh, it seems to have a lot more practical applications. They seem to be working on the efficiency issues. Like Bitcoin has some technical limitations that make me skeptical of it as an engineer. Ethereum seemed to at least be trying to address those. And so I was like, okay, I'll get in on some Ethereum. And then obviously like that just went crazy.
Yeah.
I got in at like 2,200 and now it's like 4,000. I didn't put that much in though. Um,
But that
so
20
yeah,
bucks, man.
yeah, right, right. I mean, yeah, I'm down to talk about like what this translates to in overall dollars. Um, I sent all that information to you, I think.
Yeah.
Uh, Total net assets 1 million, and that the reason I want to talk about it is just because like the amount does affect kind of like how you think about these allocations because like you said 1.5% might be $20 to somebody, might be $2,000 to somebody, might be 200,000 to somebody who's got a lot of money.
Yeah.
And even though the percentages are the same, like I don't know, I feel like the practical outcome of having, like I think if I had 1/10 as much money I might not put any money in crypto just because uh, I don't know if it would impact my day-to-day life, but uh, right now I have 15,000 in crypto, and between like the growth from BlockFi interest, like it's real income. I've already made like 200 bucks off of that interest, and that's paying for that subscriptions category from
Yeah.
earlier. Like
Right, right, right.
it's nice. So, and it also is important to understand like when I tell people that I have thousands of dollars of crypto, a lot of people would be like, "You idiot! What the hell are you doing, man? That's like fake money." But if you say you've got like 1 or 2% in crypto, like it's a lot safer, right? As much as I made myself sound like a financially irresponsible idiot in the bio, like I have at least adhered to my one principle from the rant. I think there's a specific line in A Random Walk Down Wall Street where they say, like, the whole premise of the book is you're not going to beat the market, don't even try. And they have like a little caveat where they're like, we know you're going to try because you're dumb. Like, just only risk what you're willing to lose. And I've held true to that. So uh, I've lost a lot of money on that penny stock, but at the end of the day, even though it's real money and I could have used that on many other things, it's not it's not money that I couldn't afford to lose. So I think that's important for people to keep in mind, especially given like how crazy like retail involvement in stock trading has become. It's gotten, I mean, this
Crazy.
is unprecedented. It's crazy.
Yeah.
But it's crazy.
So So yeah, we have some comments here. Obviously, what crypto you basically said is